South Beach really sort of slowed in November. It really tapered off into that traditional holiday sort of lull period where in October we saw 32 units accept offers. In November we only saw 13 units accept offers. So basically about a 60% fall off in the amount of condominiums listed accepting offers and theoretically going to sell in December. Obviously, a handful of these are in cash, so that 30-day sort of escrow period might be a little bit shorter. The data could be a little bit skewed, but right now we're projecting about 14 to 15 sales in December from 32 in November, which means 32 offers accepted in October, from in the 50s back in October. So you can sort of see that market start to taper off into the holidays. As typically happens, whenever a building goes into litigation, we as the broker community sort of start to expect sales to really taper off in that building too, which is unfortunate because Lumina just went into litigation. And Lumina was the best option south of Folsom Street. Obviously, everything north of Folsom Street falls into the Melrose tax zone. An additional tax that homeowners have to pay every single month that goes into the city, that helps develop the local neighborhood. So Melrose set north of Folsom, Mira, the Avery, 181 Fremont, etc., etc. The second you get south of Folsom Street, and obviously Lumina is on Folsom, but the south side, no Melrose tax, more value for money, and also a similarly new building, like it finished construction in 2016. So now that Lumina has gone into litigation, there really isn't that logical option to drive buyer traffic towards when they say, hey, I want something brand new and I want it to be downtown Eastcut South Beach. But I don't want to pay an extra $15,000 to $30,000 a year in property taxes because it falls under Melrose. We would just sort of guide them to Lumina, right? Like, hey, this is 2016 building. It's basically the same product, same amenity package, same HOA fees, etc. So now that when it falls into litigation, it just becomes a little bit more challenging to find financing. So less banks are willing to lend on properties that are in litigation. Obviously, if the homeowners association is suing the developer for a construction defect, banks are going to be a little more hesitant to lend. But there's a handful of banks that are obviously still lending in the building, as well as so many local banks, and I think First Republic falls under this banner too. They have so many loans in the building, they have so much debt tied to that building. I wouldn't be surprised if sooner rather than later they start lending on the building again. But diving into sales data, which is what we're here for, I'm going to share my screen, so come with me. Pulling you inside InfoSparks, this is where we sort of generate a lot of our graphs. This plugs directly into the MLS. I think the things that are most interesting, and what I've got here is the orange line being South Beach, and then just comparing to the purple line, which is San Francisco County in general. Average sales price. Obviously, this spike looks really significant, and it is. I'm not saying it isn't. But I think what happened recently, at least towards the end of fall, there was a couple of really high price point sales that we necessarily weren't anticipating. There was a high floor B stack unit sale in Lumina that sold for 5.5, something along those lines. And there was a handful of high fours as well, which really pulled this number up. But if we kind of span it out over a rolling average over the past year, a rolling 3-month average, which is a pretty good way of indicating how a market's faring, South Beach has just basically been continually climbing most of 2021. If I take it back, obviously there was this sharp drop off, and that's pre-pandemic. Interesting. Okay, so the South Beach market really didn't respond as strongly as the Mission Bay market did in terms of average sales price, mostly because a lot of these homeowners and people that live in South Beach, they know the value of their unit. They know the neighborhood value in general. So when buyer demand really tapered off, if they didn't need to sell, a lot of these people just didn't really sell. And I think you can see that really clearly here. If I go to days on market, South Beach on average, again, you take it back, let's go monthly. You take it back to sort of 2019, summer in 2019, you're seeing condominiums on average sitting on the market for like maybe 20 days at most, 12, 18. Pandemic hits, you see this crazy high creep up. Let's go back to that rolling three month average. You just see this creep up to basically this time last year in December 2020, when 57 days on market is insanely long for South Beach. And again, look at San Francisco, right? Like 50 days on market, 53 days for condominiums. The most telling sign, I think, and this is obviously a slight increase here, but because days on market for condominiums has sort of hovered back around like under a month, basically, I think that's a pretty darn good indicator of the buyer demand is mostly back in this area. It's going to take a little longer to sell a condo than it did in 2018, 2019. We're not at that peak demand market. But what I think you'll see happen, and then gauging month supply to like the number of sales that happen divided by the monthly average, how many listings are on the market, what's the supply? I think you'll continue to see desirable units selling even through the winter, like a high floor unit with a patio and a view. It's going to sell pretty well. Less desirable units, lower floors, less view, no patio, no private outdoor space. That's going to be a challenging product to sell. But in general terms, just from looking at this data, the chunk of the spikes that the pandemic caused have mostly tapered away. So what I'm anticipating for 2022 is a very regular condominium market with regular seasonality to it, sort of peaking in March, April, May. It'll drop off for a few months in summer, and it'll peak back up sort of September, October. And especially with major companies having their back to office set in sort of February, March, you're going to see a pretty typical condominium market next year. General consensus from the agent community, if you're going to sell, if you need to sell a condominium, I would wait until spring 2022. Obviously, there's 96 active listings on the market right now, which is basically double and a half monthly supply, the number of units selling in a given month. And with December's theoretically really low sales rate, there's a lot of supply on the market. There's not a whole lot of buyers. Wait until early, probably March is when you'll start to see that buyer activity really tick up. And that also might tie into back to office. If Uber and Airbnb and Instagram and all these bigger companies are sort of coming back to office in February and March, you should see an uptick in buyer traffic too, because people hate commuting. They hate driving across the Bay Bridge. They'd rather have a condo downtown. You're probably going to see a lot of those people that bought bigger houses out in the East Bay or in the Silicon Valley. They're probably going to be looking for investment properties in San Francisco that they can come and sleep in, so they don't have to drive. And if you're buying, there's about 100 units on the market, and only 15 of those are probably going to sell in December. So there's a whole lot of opportunity for negotiation. If you can find the sellers that need to sell, there'll be some deals out there for sure. As always, ask any and all questions. I'm here to answer. I'm here to guide. Let me know.